evening, members. I welcome you all for this study circle meeting on the topic of sustainability reporting, business responsibility and sustainability reporting. And to develop on this subject, we have CA Pradeep, Mysore Suresh sir with us, and may I request CA Vishnukant Jagal sir to escort the speaker onto dais and then welcome him with floral bouquet. Thank you, sir. I have privilege in introducing today's speaker, CA Pradeep Mysore Suresh. He is a chartered accountant and an affiliate with ICAI UK. He is based out of Bengaluru and has over 19 years of assurance experience, primarily serving the growth of companies and startups. He has successfully managed many audit and gap conversion engagements and has worked as subject matter expert in resolving complex accounting issues with respect to revenue recognition, business combination and consolidation under Indian GAAP and IFRS. In his recent past role in a large accounting firm, he has served as a national technical accounting leader and national leader for accounting advisory. He is currently working with EY as accounting advisory partner. With this brief introduction, I present before you CA Pradeep Mysore Suresh. Before Sir takes over, I have a couple of announcements. We have a breakfast meeting on 2nd December 2023 and we have 2 days ICAI Startup Yatra on 6th and 7th of December. It will be afternoon session followed by dinner on both days. We have study circle on compulsory auditing standards subject on 13th December 2023 and we have 15th and 16th 2-day CB program for 12 hours CB. With this, I request to see Pradeep Mysore Suresh to take over. Thank
you. Good evening, everyone. Am I audible? Yes. Thank you for the warm welcome, sir. And it is indeed a pleasure to be talking on a topic which is quite close to my heart. And of course, it is new. It is new for everyone. It is something which takes you to a journey which is not financial in nature. You will not look at balance sheet. You will not look at P&L when you're talking about sustainability to start with. Okay, but of course, like everything in the world, any activity in the world has a financial impact. There is nothing done without it. Right. So we will also draw the line as we go through this discussion as to how sustainability has an impact on financial reporting. We'll also discuss in the next hour and a half what is non-financial reporting. We are quite, comfortable with financial reporting as we know it. We know how to audit them as well. But we'll introduce the concepts of non-financial reporting. The audit of non-financial reporting is now coming. It's going to be applicable for some of the parameters in the next year. That brings a lot of opportunities, a lot of complications nonetheless, but that's something that we cannot be ignorant of, because there lies a big opportunity for all of us, not just in the assurance field but also in the consulting space, to actually make a difference in the world by advising clients in this area. So we'll also talk about the journey which sustainability has taken globally. What has happened over the past 20 years, where are we standing now from a global perspective? Because I believe this is necessary for us to appreciate what India has done so far, and you'll be pleasantly surprised that we're quite ahead of what other countries are doing in certain aspects. And then we'll also discuss about the Indian framework for sustainability reporting. Right? So we'll go to the introduction, we'll talk about global frameworks, we'll also talk about India framework and specifically BRSR, which is the topic of the day. We'll spend a lot of time on BRSR. The reason why BRSR is the main topic of the day, I've kept it to the end, is because if you do not know the background behind this, it will then become quite a checklist kind of an activity for a company to do a BRSR reporting, which is not the intent. The intent is a lot more which we talk about, but yeah, BRSR is something that we'll spend a good amount of time on. As time permits and as we go through certain complexities in reporting, we will also look at one example of BRSR reporting of let's say TCS, which I have handy. We'll go through how the actual reporting has happened and what it means. We'll also briefly talk about assurance of BRSR parameters. There are some assurance requirements now that are coming in the next year and so on. We'll also discuss the assurance frameworks that exist, which is commonly used for the purpose of providing assurance reports on sustainability reports. Right. So this is going to be the agenda for today. There's a lot to cover, but there are not too many slides. Right. And I would want to hear a lot from you because this is new, and I believe that you will have certain question marks in your head, your questions that I want to hear, and perhaps I will learn from those experiences as well. I've had the privilege of being on the Global Sustainability Reporting Forum for a large firm before I joined my current organization. So I could give you some insights on what those conversations were before the ISSB got set up, and what is the framework around which the whole development is happening globally, right? And I'm happy to share those experiences as when the questions arise, right? Now let's talk about non-financial reporting, right? NFR as it is referred to. So far, like I mentioned, we are very comfortable with financial reporting. We in whatever form it is. But when it comes to non-financial reporting, we believe that it is something which is outside our expertise, right? So what's non-financial reporting, right? And why are we talking about it today? Sustainability reporting is a subset of non-financial reporting, and today reporting frameworks around ESG, we'll talk about ESG or sustainability, has grown to a level that it is just as equal, if not more, it is just as equal as reporting of your financial performance, right? So be it for your capital raise, be it for your valuation on the stock exchange, be it for compliance with your local laws and regulation, be it for survival, non-financial reporting today is a very valuable reporting that all companies have to do in some form or the other. Obviously, this being such a big change, it cannot be made applicable immediately at a very large scale to all companies. So there is a phased way of making it applicable. But the idea is that the focus is now not just financial numbers, but also looking at the non-financial parameters that are related to ESG, which again we'll talk about, and sustainability, which has a lot more complications than we are comfortable with managing the financial space. So we'll discuss about those, in a few minutes. But the non-financial reporting today, like I mentioned, is just as important as financial reporting. Right? There have been some bits of non-financial reporting that has crept our way through in our financial statements to some extent. But there's a lot of that in the MD&A, which you would have seen on annual reports. There is a lot more in the director's report around the CSR activities, around usage of energy, waste management, and whatnot. But that has been very, very limited, and so much so that these have become boilerplate clauses. The secretarial team or the companies copy paste what the other company has written, put it there just for the sake of compliance. They get fired, and that's it. And the story ends there. Right? So there is also a theory that the concept of CSR, which was infused into our reporting, our regulatory environment many years back, has failed to achieve the social objective. Right? That is primarily because the company does not change the way it operates. It will earn money by doing whatever it is doing. It will spend a portion of that by doing some social activity, which is not the true intent of a sustainable business, right? Or the true objective of sustainable businesses. So it was later realized that having just a CSR policy would not be sufficient for achieving larger goals in terms of having, to reduce the temperature across the world by 1.5 degrees and whatnot. So CSR was a good start, but nevertheless not a holistic solution towards sustainability reporting. But having said that, many countries across the world have chosen the same path. They introduce CSR just to bring in that angle or the perspective of social responsibility. But then the things evolved after that, right? So CSR today is one reporting, one obligation. The company looks at it that way. But truly, that's not the essence of sustainability reporting. It is far more than just contributing to, let's say, a relief fund or doing some free of cost education to the nearby community. Right? So, how does one measure a company? Right? How does one measure a company's performance around these parameters that are relevant for sustainability or ESG? Is the question that a lot of reporting organizations started to solve. Right? And that resulted in different answers because different people have different problems, different people have different perspectives, and therefore we today have a lot of frameworks around non-financial. Right? We'll discuss all of that. But before that, I think we should briefly talk about what is ESG. ESG and sustainability are more or less used interchangeably in conversations like these. But ESG brings in a lot more direction to our conversation. ESG, E stands for environmental, S is social, and G is governance. Right? So these are the three principles or three main pillars of sustainability reporting. Right? When it comes to environment, what does the company do in relation to the products that it sells? Right? What does it do a life cycle evaluation? What is the emission around production of their products? Is there when a new facility is set up, are they polluting more around the environment? Is there an implication on the local tribals, local communities? That is something that one would also evaluate. Now, there have been significant amount of development across COP 26, 27, and 28, which is due in the next few weeks. COP is a conference of participants. It's basically what happens is across the world, delegates from different countries get together to solve this problem of climate change, right? And those are very large, gatherings where each country then signs up to a particular target, amongst other things that they deal with and discuss over there, and that becomes some sort of a guiding principle for every country to be owning up to those responsibilities and being held accountable for progress towards that goal. Right? So that is where a lot of these discussions happen, and a lot of principles and frameworks get developed in that discussion. Second aspect is social component. We are talking about people. Are we taking care of, are the businesses taking care of the employees? Are they taking care of the employees' families? Are they taking care of communities around? Is there an impact of the products that they are selling on people? Are you selling the right product? Are you selling something which you shouldn't be selling? Right? And those kind of things are relevant here. So you may today have not even noticed that Johnson & Johnson products, right, that are baby care products, a lot of them have got banned today. Right? Some things that my mom used to use is not relevant for my daughter today. Right? So that is because they have also understood that the J&J have understood that this has an impact on not just the customers but also communities around, which could then prove to be fatal for the company to continue with such products. So it is slam dunk that there will always be something like this in every company which is in the space of pharma or many large like mining or exploration, where there will be these products which are detrimental to the social angle and also the environment. Then comes the governance, right? And this is, I would believe, the most important one. While you would say, there is environmental and social angle, which is what we are going to tackle through sustainability reporting and NFR, but without governance, there is nothing to it. Right? Today, if there is not a committee on ESG in a large organization, if there is no independent review of the targets and its compliance and determination of the KPIs around it, it's all greenwashing. Right? Greenwashing is another thing that we will discuss today as to what that is. Right? But basically, without governance, the reliability of whatever is being done, whatever is being reported, is diminished. right? So, I mean, you've been very aware of what the corporate governance reports today cover for a listed entity, and a similar kind of framework would then be applicable for non-financial reporting. So, the board of directors who sign up to the BRSR or sustainability reporting in a different form, which I will deal with later, take up the responsibility that whatever is reported there is true and correct, right? And the objective of the framework is to internalize the responsibility towards environment, the responsibility towards social, right? So that is the true, objective of non-financial reporting. It's not just reporting numbers. It's about owning up responsibility for environmental targets and social targets, so that all companies, including the countries together, are able to achieve the climate goals that we have established for ourselves. Okay. One of the most important goals that everybody is chasing is 1.5 degree reduction in temperature across the globe by 2030. Right? And that was agreed in 2015 in a Paris Agreement. And that has become a guiding factor for all the global frameworks, all the global principles that got formulated during that time. We'll talk about this later. But that has been the genesis of all discussion. It's not that before that nobody spoke about climate change and whatnot, but at least at that time a lot of people got together who were independently managed. At least they came together in one room and they signed up to this target. Right, because it's not just one country's responsibility, it is a partnership. There's been discussion about the fact that developed countries have done all the polluting, and now the developing countries have to face the restrictions around what they can do. Right? That, I mean, it all came as a part of debate, and one can say it is right, one can say it is not. But at the end of the day, we need to partner, right? Without which, because we all share the same planet, we cannot survive without partnering. So one of the key SDGs, which is another thing that I will talk about in the next few minutes, which is the Sustainability Development Goals, which were formulated after the Paris Agreement in 2015. The most important goal that was set was partnership. Nothing else. There are 17 goals that were set. We're covering a lot of things. I will discuss that in a few minutes. But the most important one that was discussed in great detail was partnership. We are all in one classroom. We can't fight with each other, right? It has to be helping each other out. There will be countries who will not be able to invest. There will be countries who will have significant amount of funds lying idle, right? So how do we make sure that there is partnership between these two factions to make sure that we are able to achieve the same target? Very, very difficult to achieve, but at least a target has been set now towards that. Right, so that's brief about ESG, right? And whatever we're going to talk about in the next few, let's say an hour or so, is going to be around this topic, right? Our reporting in BRSR is also aligned to global standards, which I will again discuss in a bit. But keep in mind that everything that we're going to talk about has these three angles to it, right? When you say that I'm going to take a net zero target, what is net zero? Again, I'll explain. If I take a net zero target, how am I going to achieve it? Who is going to make sure that the reporting of progress is happening? And how am I going to report that in the annual report is something that we will discuss, right?
But
now,
one clarity, you said reduction 1.5, but it cannot go beyond 1.5.
So, it is
pre-industrial level.
Pre-industrial.
Yeah, so it cannot go beyond that.
Beyond that.
How do you say?
1.5,
yeah.
So that is 2050 target.
Yeah.
2030 is to get down to pre-industrial level, and then 1.5% in the next year. So when it comes to non-financial reporting standards, right, there have been a lot of debate around the fact that it is completely unorganized, right? I mean, at least for us, when it comes to financial reporting, we know there are accounting standards. For auditing, we know there are auditing standards. Yes, each country, each institute has its own, but at least we know where to find guidances or standards for the purpose of accounting reporting. But when it comes to non-financial reporting, the issue is far more magnified, given the fact that a lot of people are solving the same problem, and given the different perspectives, they have come up with their own methodologies for it, right? But having said that, all of them are good, all of them were well debated, well adopted in their respective jurisdictions, but there is not a single set of framework for the purpose of reporting. Right? And that got very recently established. We'll talk about that. And even then, having said that, right, there are still different jurisdictions who have their own way of doing things. Right? So we will talk about ISSB in the next few slides, which is now equivalent to the IASB, which gives out manpower standards. But having said that, while ISSB was formulated and ESRS came in Europe, CSRS came in Europe, and then we have the US doing their own, SEC having their own reporting standards on ES. So it will take some time for achieving singularity. Perhaps we may not even achieve it because even today on accounting standards we are not able to achieve singularity. Right? We still have IFRS, we still have US GAAP for whatever reason. So this journey is quite long, but it has just started. Right? So this is something that has caused a lot of confusion amongst people. How do I handle non-financial reporting? Which standard do I take? Which is better than the other? Will my audience understand or my stakeholders understand whatever I'm writing? Right? So all of that has now become quite a hodgepodge when it comes to non-financial reporting. Right? So one of the biggest changes in perception that has happened in terms of reporting is that we are not talking about stakeholder impacts. We are not talking about shareholder reporting. We are talking about stakeholders. That's a big change in perception, right? We know what the shareholder is looking for. He has invested in you, so he is looking for returns, as simple as that, right? So all of our accounting standards, auditing are based on ensuring that the right revenue, right expense, right PBT, assets, liabilities are recorded, right? So much so that the materiality that we set for audit purposes is based on PBT as default. Right? So if that is the way we are thinking currently when it comes to financial reporting, right? The fact that we are only concerned with the shareholders' interests. Now opening up our horizon to consider other interested parties and calling them as stakeholders and making sure that their interests are also addressed through reporting is a mind-boggling change. Right, so I will take you through TCS's BRSR report where they have defined and identified who are their stakeholders. Okay, and the way they have done it, and which is what anybody would have done, because the definition of stakeholder is so large, it would cover everyone in the world. Okay, it would cover me, it will cover you, everyone in the world, right? And imagine this is what I'm talking about is an IT company, right? And if it were, let's say, Vedanta or Reliance were into more complex natural resources dependent industries, the stakeholder could be far more elaborately explained and not very generic, right? And it really matters there. Right, so stakeholder reporting itself brings in a lot of complexities, right? We are talking about, in financial reporting there is a concept of materiality, right? In non-financial reporting today we have the concept of double materiality, right? That's new. Right? And okay, practitioners may understand it. Will the stakeholders understand? Will the investors understand? Will the employees understand? Will the shareholders themselves understand? Is the next thing. Now, so all of this when is getting formulated, investor education or stakeholder education is extremely important. And more than that, I think we as a team here of chartered accountants also need to upskill ourselves to understand what these mean, because if not today, tomorrow you are going to start issuing assurance reports on these standards, on these reports, right? So there is an issue of complexity as well, because we are talking about a lot of things which are very technical, right? We are talking about so much metric ton of carbon dioxide emission, right? Okay, so carbon, GHG is greenhouse gases. In 2015, the protocol, GHG protocol was formulated, and there are 6 gases which I can hardly pronounce, right? Which add up to GHG. The most common thing that we have studied and also spoken about in daily life is carbon dioxide. That's it. There are 5 more which I can hardly pronounce, right? But how does a person like me understand and compute such things? To find out, okay, if I am manufacturing, bikes today, what is my carbon emission? How do I compute that? You will need a different set of expertise there. Right? We cannot do it. Honestly, let's be honest, we will not be able to do it. Similarly, if we have wastage, right? What kind of wastage are we talking about? There are so many wastages that we don't even understand, right? And we don't know how they need to be treated. So one thing is knowing that these things exist. The other thing is to manage the exposure that is coming from there, right? This is referred to as the risks and opportunities around ESG factors that a company is exposed to. So risk and opportunities is another phrase that you will hear in different frameworks, which clearly tells you that an entity has to identify climate-related risks and the opportunities that it gives rise to. So where there is a risk, there is also an impact, but there is also an opportunity, and you need to now start reporting those in your non-financial reporting reports. Right? All this is complex. It is complex. At some point, there was a discussion on whether the assurance of the sustainability report should be done by chartered accountants or not. Chartered accountant equivalents in the globe. Whether they are capable of doing it. Right. That was first question. Second question was, okay, should the statutory auditor be doing this or not? Right. That was also another discussion that was had to find out whether the statutory auditor is capable enough to do sustainability reporting assurance also or not. Okay, well that question is now answered, but the first one is whether CAs can do it or should it be a team of professionals who will get together, who understand the non-financial reporting standards and then do it together. Right? It's an evolving space today, and therefore assurance reports today are being only done by large firms. Right? But having said that, this space is an opportunity, and all of us have a lot to learn from this experience, and this is something could be game changing for a lot of firms across the globe. Right?
So Pradeep, on clarity here, and SEBI came out with the FAQ, right, very recently, who can sign that, right? And before that, Institute also came up, very similar to ICAI 3000.
Yes.
So both are existing right now, and the liberty is there. You can choose. Among these two, sorry.
Yes.
And there are other standards.
Other standards also.
AA 1000.
Yeah, 1000. Yeah. Which is popular for some reason, even though AA is only a large firm, considered firm. But a lot of firms have actually used that for reporting. In India, I would say it is more or less 50-50. A lot of people have used ICAI. A lot of people have also used AA for reporting.
But was this the intent of the institute so that they can sign it initially, but that didn't work out, right?
Yes, that's correct. But I would see that ICAI will prevail over a period of time, right? Because it is far more regulated and understood than AA 1000. Sorry, I'll come up to this point later during the day. But yeah, coming back to this point of lack of standards, complexity, stakeholder education and pressures, and perceived cost are some of the things which we see as the challenges in non-financial reporting, rather than not knowing it at all, right? And the ignorance around non-financial reporting. Right. So today we talk about ESG because without this you can't have a business today. Simple as that. You cannot operate a business which does not respect the ESG goals. Today, if you are investing in a company which is in thermal power or which is in oil generation, you cannot invest until you are clear what is their transition journey, what is their transition plan. Right? Now think of economies like Dubai, UAE, where their whole economy is dependent on oil. Right? So how do they transition? Right? So today, if you had an opportunity to invest in ONGC or HPCL, please do not invest until you know what is their transition plan, because you know for sure that 15 years from now, their business is going to be fully challenged. It's quite likely that none of us will have a combustion engine vehicle to drive. It's quite possible. Right? So in such situation, what are these companies going to do? What is their business model? Right? Definitely, it's a big challenge for them, but like I said, where there is a challenge, there is an opportunity also. Right? So it is very, very important for investments, for the investment decisions that you want to make. It is important to align your business strategies to ESG goals to achieve better valuation. One of the key things that perhaps Tata Tech today was well subscribed was because of their ESG focus, their technology around ESG, their technology for cars and stuff which are relevant for electric and hydrogen cars. So that is a key driver for value, right? And there have been many reports which are statistically proving that companies who are focused on ESG, who respect ESG, are better value than others who have at least not even reported. They may be respecting it, they may be doing everything right, but if they not reported it, investors don't get to know about it, right? So better valuation, okay. I think for existence itself, you will need to have an understanding of ESG, you will need to have an appreciation of what you need to do to change your ways of doing things, right? You may have noticed over the past few years, Amazon deliveries and Flipkart deliveries which were coming in plastic have now started coming in paper. Swiggy, Zomato have started now coming in cardboards and papers, right? That's a big change. It was easy for them to do it, right? But I mean, I can easily stand here and say it was easy, but it was a very well thought out plan because you're reaching out to millions of customers with that message, right? But you know, you're buying a TV, for example, right? You know that it gets packed in cardboard, which is you can recycle. But the thermocol that it comes with, you cannot recycle that, right? What do you do with that? You give it to the garbage picker and then God knows what he does with it. Absolutely. I mean, when it comes to, if you see other phones, the phones generally do not need such a thing, but the kind of material that they've started using are more which are recyclable, right? But having said that, these are very small steps that everyone is taking, very, very small steps, right? But at least we as consumers should be able to understand that there is this issue which touches everyone. Nobody is spared. Okay, I was served the bottles that are here, right, for water. Isn't that an issue? Right, I'm going to drink that's 250 ml. That's, yeah. And there's no process for recycling it. Right, whose responsibility is it, by the way? For example, let's say I buy LG TV and the TV comes with a half a kg of thermocol. What do I do with it? Who is responsible for it? While I may be the ultimate customer, the person who is responsible is the one who is generating it, right? In my example, it is the OEM LG, right? So that is an additional obligation which he owns up, right? Many years back, there was this e-waste management regulation that came by. Are you aware? E-waste management, and there was reporting around that as well. That was again the first baby step they took. But what it triggers is something called as the product life cycle management, right? So a product life cycle management itself is a big topic in it, you know, for debate, discussion and learning, where the company which is manufacturing a product does a complete analysis of what is the ESG impact of its product, right from where the basic natural resources that it consumes and back to it. Right? Because it has to be recycled in some form. How do you recycle it? What is the life of that product, and what is the emission that it will have on those products? Right? So when we are talking about, let's say, electric bikes, right, today, we all think that electric bikes are fantastic thing for us. Yeah, we believe economically it is good for us because our running cost reduces. But is it actually an ESG positive product?
Lithium batteries.
We don't know today, right? So we are saying that our electricity that we consume in Karnataka, for example, is generated out of thermal power. So you are charging your vehicle using thermal energy. That's number one. Secondly, lithium itself to manufacture has significant amount of environmental impact, right? Yes, after the battery gets used, I mean, this is something that we don't know because it will have a life. After 5 years, what are we going to do with that? what do we do with the cells that we use for toys and stuff? We just throw it without even realizing the impact it will have on environment. Right? So, without doing a complete life cycle analysis, one cannot actually determine that this product is good, or the organization which is manufacturing that product is taking the responsibility. First of all, understood the impact and taking the responsibility for the impact it is causing. Right? So this is a very big shift in our understanding, very big shift in the way people are going to run business. Right? So a little bit of this later. A lot of funding decisions are now based on how the ESG parameters are for that particular investing company. So funding is also better. Globally, you will get cheaper funds if you are in a business which is ESG impactful. Right? Okay, let's talk about very quickly on the principles and frameworks. And these are global frameworks. The principles that are on the left side are the guiding principles, not just for financial reporting or non-financial reporting. That's an outcome. But these are the principles that are used for national policy decisions. Right? So there is a beautiful report by Niti Aayog, where over the past 10 years, all the policies and the schemes that have been announced by our country, how does that align to SDGs, for example? Now all of these are acronyms, so that I'll take you through each of them briefly. SDGs were issued by United Nations. These are referred to as Sustainability Development Goals. There are 17 such goals. Like I mentioned, one of the most important one is partnership. Right? So each of these have a definitive definition. There is something called as the indicators for each of those to give a better understanding of what that SDG means. Right? And people who have signed up to the UN, right, are required to comply with those goals and sign up to a target. Right? And hence, all the policies that the respective countries would roll out would have to be in compliance with these requirements. Right? Like for example, if you're talking about Jan Aushadhi Yojana, right? So that has got something to do with people. People is another, SDG. Right? Then we are talking about India's commitment to net zero by 2070, that is related to climate change. There is something around afforestation that's relating to life above land. So those are these goals that are enshrined in this document. There is enough or more on this on the website of United Nations, and you will see that there are short training material also there, right? So which you can learn if you have some time to spare. Please go through this. It is very, very important to see how this is the genesis of all the things that we are doing today in different forms, right? And the Niti Aayog report is another thing that you should see. It was released a couple of years back, which gives you this alignment of what were the SDGs that were achieved through different policy decisions of the country, right? So that's the level of principles that have got enshrined in the SDGs. Similarly, there is UNPRI, which is United Nations Principles for Responsible Investing. So that's the framework for investors, or may not be just you and us, but of course, very large institutional investors, investments by let's say World Bank or large FIIs, where they have codified what should be the priorities when you are doing an investment. Right? A lot of things have happened in the past. There is black time and there is a lot of chemical hazards that have been reported. Investments still flow into such companies and industries. So there is this discussion around what are the principles of identifying whether the investment is right or not. Right? So that is being enshrined in the UNPRI. There is UNGC, which is United Nations Global Code. What we're talking about here is basically there are 10 principles in this, and again everything around people, human rights, social, and environment. Then there are two other specific principle-based projects which are related to climate change. So CDP, which is Carbon Disclosure Project, and then you've got SBTI, which is Science Based Targets Initiative. These two are very specific to climate. That is, GHG emissions and how do you manage those emissions. These two are quite similar in nature, but different organizations where large companies sign up to a target, where they need guidance, right? Because it's a new thing, every large organization would need some sort of a guidance on, okay, if I embark on a journey of net zero, how do I get some guidance, right? It's all theory, whatever I'm saying is theory at the end of the day. They can go to CDP organization, you can go to SBTI organization, seek their guidance, collaboratively develop a science-based target and report to CDP and SBT on your achievements. It has been statistically proven that people who have CDP and SBTI targets are valued better than their peers, right? But this comes with the fact that you will have to do annual reporting. It's not mandatory. It's not mandatory to do CDP or SBTI reporting, but people who do it are better off. You can see CDP reports of Shell, you can see Aramco. Just have a look at it for 5 minutes. You'll get to know how detailed it is. Very technical for chartered accountants like us. It's very difficult to understand what they're saying. But it's a way to manage the climate risk. Right? So these on the left side are the principles, right? Now when it comes to reporting, again there are various frameworks that are currently available, right? And which was one of the issues with non-financial reporting as well, which we discussed a few minutes back. The plethora of standards, the plethora of frameworks that are available. But mind you, whatever has been developed today is based on those principles which have been agreed to. So we have SASB standards, which is an American Sustainability Standard Board, right? And we've got GRI, which is the most accepted sustainability reporting framework. We'll not talk much about it, but this is a subject on its own. It's like IFRS. There are 36 to 34 standards which are extremely topical. Right? There are certain standards applicable for, let's say, water industry, anything to do with mining, anything to do with manufacturing of cars. It goes to that level of detail, right? And it gives you guidance around how you should do reporting, how you should set target for yourself, what are the matrices that you will develop, and then how you do the reporting. So GRI is the poster boy of sustainability reporting. We also have integrated reporting, IR, which is again another foundation. But IR is known for its ability to interact with your financial reporting. Right? That's why it is referred to as integrated reporting, where the financial reporting and the non-financial reporting get together. Right? This creates a new perspective for a person who is reading it as to the fact that the financial numbers are just one element of the overall report, but there are so many other things that the company speaks of which are aligned to achieving the ESG objectives. Right? So IR is the second famous framework that has been used. Slightly complex, but yeah, very famous. ISSB is the new kid on the block. 21 was when they got formulated, November 21 in COP26. Within record time, before they were formulated itself, a committee was formed to start working on the standards. Okay, there are two standards that have been issued, IFRS S1 and S2. Okay, these are the two standards that are now out and fresh out of the oven. That means exposure draft is completed, comments taken, and it's all ready to be applied. They need to be applied from the next year, that is January 24. Of course, there is a phased application that is made, but nothing is compulsory right now when it comes to India or the globe. This is primarily for the European and the UK markets. But ISSB exists today. Right? TCFD is another US reporting standards, which is task force on climate related financial disclosures, right? But focused on financial disclosure. TCFD is focused on financial disclosure. There's another thing called TNFD, which is on natural resources, biodiversity. That was the key focus for the COP27 last year in Egypt. But that is something new that has come. Right? So these are some of the reporting frameworks that exist. Highly technical, highly focused on sustainability, nothing to do with financials. Right? So financials today, as of now, in our discussion so far, we have always considered financial to be a separate set of pages, and now start sustainability. Right? That's how we've been discussing. Except where it is integrated reporting, where it is both handed together.
In ISSB also there's a concept of connected information.
Connectivity, yes, yes.
So that is a new.
That is new.
And I think if you go to the previous one, I think SASB, IR, PCFD would be subsumed into ISSB.
Yes.
That's the plan.
That's the.
That's the plan.
So what happened in 21 November when ISSB was announced, right? So I think it would have been a very, very difficult agreement to achieve, because each of these organizations that we spoke of, which is GRI, SASB, IR, are hugely respected organizations, different jurisdictions. They all got together and said, okay, we'll let go of our cloak, now we'll form something new, okay, which we will work as a team. I'm sure this would have been a significantly difficult conversation to have. And finally it was achieved by the creation of ISSB. Now, there is the IFRS Foundation, then there is ISSB, and then there is IASB. Now, IASB is all what we know of the accounting standards. ISSB is relating to sustainability standards. Right? So, the parties who were having their own set of standards and reporting requirements got together today. All of them find a place in the ISSB board, right? So they are board members. They have a say in how it gets done. There was a lot of discussion around who is going to pay more to get more voice at that time. It was a political game, right? Okay, SASB may have had a lot of money. They would say, okay, SASB, we will contribute so much in terms of donation. Give me more board seats. This was not an easy conversation, and because I was privy to some of the developments that happened at that time, achievement of this, collaboration was a significant step, right? You can imagine of all the financial reporting, discussion that we've had, US GAAP still is US GAAP. We have not achieved, collaboration with them. IFRS 15, 16, 17, all are slightly different in US GAAP. But that was the first step, right? Then came the standard setting. Like I mentioned, before the ISSB was formed itself, there was a task force that was created which started working on the standards, right? So people from these different organizations contributed staff and they started working together. By the time ISSB was formed, they already were discussing about a working draft of S1 and S2, and soon it came out. The moment it was announced that ISSB is formed, in a couple of months it was out. The fastest ever you would see an organization getting together, set of organizations getting together and the standard coming out. Okay. It came with a good period for response. A lot of responses were received. But then today we have the final set, which is IFRS S1 and S2. Right? S1 is general in terms of disclosures, management, materiality and whatnot. S2 is more topical and industry based. So S2 itself, the standard is close to 350 pages. Of course, not all of it is going to be applicable. It's going to be depending on the industry that you're operating in. And you will choose those guidances that are relevant for you.
S2 is climate only.
S2
is climate.
Yeah, and reporting around biodiversity is yet to evolve. I don't think we are anywhere close to what is GHG standard, climate change standard. Nowhere close. So COP27 was the first time where TNFD, like you mentioned, on biodiversity was discussed and agreed, targets were agreed, but today we are yet to see the light of the day on the reporting. That may happen in the near future. Like I said, everything is on fast track today. Right? So today you would have imagined now that with all the discussion that we've had, that ESG is now very important for us to understand, appreciate, and also as advisors to the companies. I think this is something that you can have as intelligent conversations with them. Right? And very much the need of the hour to upskill ourselves, even though we may be experts in financial reporting. The fact that ISSB is now under IFRS Foundation gives us a lot of leverage. That itself, gives us a head start. When you're talking about industry experts who want to do assurance. They don't know how to do assurance. Right? They don't know how to identify what are processes, what are controls around it. They've never done audit. They've never written audit report the way we write. Right? So that gives us a good head start for us to pick up from these developments and start collaborating with other experts to develop a framework for reporting and assurance here. Right. So this is just a glimpse of what the Indian companies are doing even before BRSR came into the picture. A lot of companies actually voluntarily started reporting on sustainability. There are great reports that you can look at, which are IR compliant, which are GRI compliant, which are SASB compliant. Okay, one of the drivers could be the fact that they had US markets to deal with. They had US investors, they were listed outside India. And also the fact that they felt their concerns was rightly aligned to make sure that they are accountable for whatever they are doing as business. Right? You will find one of the best written sustainability reports in one of these here. I really refer to Tata Steel's report and also the Reliance report. That's like one of the best reports that I've seen so far. Right, and you'll be surprised by the number of companies. This is just an illustrated list. You will see that a lot of them have actually voluntarily done it. Right? There is this one thing that I wanted to discuss, right, which is about the fact that can a company which is a private company, which is, let's say, exporting goods to different countries, can they be incubated in the sense, can they be isolated from non-financial reporting? Right. You may think, it might have definitely crossed your mind, my clients are private limited companies, small companies, 500 crore, 1,000 crore, how does it matter to us? Right. You would think that this is a problem only relevant for very large companies. Right. That's not so. Every player in the ecosystem, every player in the value chain would have to be in compliance with ESG. It's only a matter of time that every company would be required to report on these parameters and get it audited. It's only a matter of time. Right? Today in India, if we are talking about mandating audit, a reasonable assurance on certain parameters of BRSR, it's the writing's on the wall. It's only a matter of time. A few years, that's it. Right? So now what does it mean and why am I calling this out? Let us say you are exporting goods to European countries, and this is the case with, let's say, Himasinga, Gokula's exports, Arvind Mills. All of them have customers across the world, right? Because the countries or jurisdictions to which they export, those corporates, who are generally very large corporates, are required to do their ESG reporting, and they have owned up to certain targets. Those targets naturally come to the vendors who are situated outside their jurisdiction, which is us here, right? Today, there is something called as the EU taxonomy, which is a reference point for, let's say, sustainable funding, right? So, just take it that every organization or a business in the EU would have to be classified in one of those taxonomies, one of those codes. And those codes would have a respective target, matrices, and ways of doing business mentioned. Now, if you're not in compliance with that, first of all, right now there is no assurance mandate at the moment, but it's only a matter of time. The companies would also now be required to report on that in their annual reports. And it will not look good if the vendors are not in compliance with those requirements. You may lose business. Right? So therefore, it is important that these things are understood by the business, and this is an ask that is coming from one of the key stakeholders, which is your customer. He is not a shareholder, but he is a key stakeholder, and therefore, the appreciation of the fact that stakeholders' interest is relevant in your decision making today. Right? So that is the reason why this is very, very relevant for almost every company in India, every client that you are working with, in some form or the other. It's only a matter of time that it will become mandatory or it will become really visible in some form. Right? I had the privilege of auditing one of the companies I mentioned who were exporting apparel to European countries. I could also see that the customers have launched an ESG audit on them. That means they would fly down from wherever they are. They look at the factories. They have a checklist that they are carrying, which would be in compliance with the EU taxonomy requirements, and then assessing the vendor on that basis. If they do not achieve a particular score, they are out of their approved vendor list in a phased manner. Right? So, I mean, it is hitting large companies now, it's only a matter of time that it hit the other entities. Right, now let's talk about our Indian journey. Right? We've spoken so much about the global frameworks and things that have happened in the past. But you'll be surprised to know that we've been talking about social parameters, environmental parameters from way back in 2007. Right? And it is indeed that India as a country has been taking very, very proactive steps to ensure that this is well understood, and now is the time when people are going to be held accountable for whatever that is required to be done under ESG parameters. Right? So there are a few turning points here, right? While there was BRR that was given, this is the Business Responsibility Report from 2012. But the BRSR, which is the upgraded version of that, which came out in 2020, is a far big upgrade from what you would have seen from BRR. A very big upgrade. The key things that have happened between these two dates, which is 2012 and 2020, is the 2015 Paris Agreement and all the things that have got realigned to the Paris Agreement requirements. Right? So we had NBGs, monetary guidelines, national monetary guidelines. Now they have become NGRBC, right? The responsible business conduct. So that came up in compliance with the Paris Agreement, in compliance with the SDGs. SDGs were also announced somewhere in 2015. So 2015 was a very definitive tipping point for non-financial reporting. And from there, all the frameworks got revised. Today we are talking about 2020, the BRSR. It was recently amended to bring some more other complications which we'll speak of. And that's the standard that we have, or the reporting requirement that we have today. Of course, there's a phased application of that, and we'll come to that in a bit. But that is where we are today, and it's heartening to know that what is there in the BRSR format is aligned to a large extent with GRI basically. And now, because ISSB also has GRI representatives, it is most likely that it will be aligned with S1 and S2 also. But yes, BRSR is evolving. We will also talk about the assurance requirement of BRSR core. We will come to that in a bit. Right? Now, while we are talking about BRSR was not the only not the only reporting requirement in relation to this ESG. There have been others as well. There have been various acts and regulations that are around pollution control, around sexual harassment, around product waste, e-waste management, for example, which have their own reporting requirements, but quite disintegrated way of doing things. They were not collated in one form and included in your annual reports. You've been doing that independently, right? Most of the time, the detection risk is low, in the sense you may not actually comply with the requirements there, but still go scot-free because nobody is there to detect it. Right? Now, all of that is going to get streamlined in some form or the other in your BRSR. Now, in BRSR, we are now going to talk about everything which will encompass from how you employ your people, how you take care of your customers and products, and also how you take care of the legal rules and regulations that are applicable to you. Right? And whatever you write there will be subject to reasonable assurance for sure in the next couple of years. So this is going to be a very big game changer when it comes to really holding companies responsible for ESG. See, one of the other biggest drawbacks of ESG reporting, while I mentioned that there are a lot of companies who have been doing this voluntarily, is the fact that there is no database today to do any sort of analysis. Right? So we've known XBRL for a few years now, many years now. BRSR today is now in XBRL format. Right? So whatever you're going to write, whatever you're going to report is going to be searchable. Okay, it is available for the government to do analysis. You can also purchase the database, you can do an analysis. It ensures benchmarking. Okay, it enables for making sure that you have rankings. Today, the credit rating agencies don't know how to do ESG ranking. Yes, like them also, there are various standards and frameworks that they use. They have their own ways of doing it, but there's no standard way of doing it. And one of the biggest issues with them is that they don't have data to validate, right? Or they don't have a benchmarking market data, which is now going to be slowly available. Of course, it is evolving, but imagine all of this is being available on your internet. You can do research, analysis, whatnot. I mean, the kind of data that it will throw up for your analysis is going to be mind-boggling, right? So we'll jump to the RSR. I think this is something that is going to be already applicable for 1,000 listed entities, top listed entities for the year 22-23. It was mandatory. It was voluntary for 21-22, but 22-23 it is mandatory. So you can actually download the annual reports today to get good examples of how BRSR has been handled. You will get a variety of responses. People who have done just a checklist of things, people who have stuck to only things that are mandatory, have not ventured into doing something more, and others who have proactively taken one step ahead and correlated what's written in BRSR with their sustainability reports elsewhere in the annual report. Right, so there is a mixed bag response. Many companies that I've known of have considered this to be a checklist activity. Okay, I mean they are in for a surprise in a couple of years, but it is definitely not a checklist activity. Take it from me. While it may look like a checklist, it may look like you're throwing out information in the reporting of BRSR, giving some numbers which may not make sense today, but the true essence of the BRSR report is the inculcation of all the principles that we spoke of in the previous slide in the way it does business. It will not be surprising that in 10 years from now the companies will start mandating you to come in a energy efficient car or energy efficient vehicle. It's not going to be part of that. Right? So we will talk about scope 1, scope 2, scope 3 emissions slightly later, and that's where I'm coming from, that everybody gets impacted by this, right? And today it is not just checklist activity. Please take this as something which is far more encompassing and value adding, not just compliance, value adding to whatever the business is being done by the company. So there are 3 sections. Okay. The BRR, which you may have seen earlier in the past, were mostly qualitative in nature. We used to give a lot of English around how it is managing ESG related parameters. But today BRSR has now ventured into quantitative aspects. Now today, if you do not venture into quantitative aspects, there is very difficult journey for assurance of those things, for comparability, for measuring, right? So unless and until you actually convert those qualitative factors into measurable matrices, it's very difficult to measure a company against its peers or its own progress, right? So BRSR has now come up with quantitative disclosures. We'll talk about those in a bit. So there is a mixture of both qualitative and quantitative disclosures. There are 3 sections. One is relating to the general disclosure. What does the company do? How many offices, how many factories, what type of products, how many employees and whatnot. These are general disclosures. In section B, we are talking about management and process related disclosures. This is the G aspect, which is the governance. What are the processes around ESG? Again, we'll take you through some examples. And then there is section C, which is principle-wise performance disclosures. So BRSR is based on NGRBC, which is National Principles for Governing Principles for Responsible Business Conduct, which has 9 principles, right? Yes, this is where it gets slightly technical and very broad in discussion. There are 9 principles, and those principles have guiding factors, right? Those factors need to be referred to while implementing those principles and measuring those principles, right? So BRSR is based on those same 9 principles, right? And the reporting that you will do in relation to those are also aligned with NGRPC, right? So we will talk about those. But having said that, there are 2 types of quantitative disclosures as well, 2 categories. One, which is referred to as the essential disclosures. Essential disclosures are those which are mandatory, and there are some which are referred to as leadership disclosures. That means they are not mandatory, voluntarily you can give if you choose to, right? Why is this classification? Because we are aware that not everyone would be prepared for this kind of disclosure, right? And therefore you have a choice to disclose more, and if you want to go with that choice, you have the leadership indicators also which you can use and disclose, or you just stick to your basic mandatory disclosures. That itself is quite a lot, so to say. There is also a light version, LITE. There's a light version of BRSR which anybody can adopt, which is not as comprehensive as this one. So the one that we're going to talk about is the BRSR comprehensive disclosure. Okay. I'll spend, or I'll allow you to look at this slide for a few seconds. These are the 9 principles that we will talk you through, right? Yes, it gets into a lot of indicators for each of them, which I'll spend a few seconds on each of these. But you will get an idea, you will get a drift of what we're talking about, right? Again, you may draw the link to SDGs. The primary purpose of SDGs is to improve the life on Earth, right? That's the main objective, right? And all of these have something to do with that, right? So the first principle is around ethical code in the term. Are you being ethical in your operations? Is there integrity? Sustainable goods and services, the life cycle of the product, we will talk about that. Well-being of employees, respect for interest of stakeholders, and so on and so forth. So all of these are the key principles or the pillars on which the BRSR has got formulated. Okay, we'll talk about this. You don't need to memorize this. It's just that you start remembering history sessions in your school. But this is the mapping of SDGs with the principles. This is one way to prove that whatever is there as principles in NGRPC or BRSR are mapped to SDGs. Now, can you imagine how SDGs are influencing the policy making in a country? Right. So this is the true impact of SDGs once you have signed up to those targets. Now let's spend a few minutes. I will not take too much of your time on each of these principles because it may become very, very technical and boring. But I want you to still get the drift of what is generally required around these principles, right? So when we are talking about principle 1, which is businesses should conduct and govern themselves with integrity in a manner that it is ethical, transparent, and accountable. There's so much of English, right? But the fact that you are having KPIs around it, okay, will ground you in the sense that are we actually talking about this in real measurable targets? Do you have a code of conduct? Let's start with that. Do you have a code of conduct? Right? Okay, you may have a code of conduct. Who are the participants of the code of conduct? Who is signing up to the code of conduct? Is it only your customer, or is it only your vendor, or is it only your employees? Right? Is it the whole ecosystem that you are operating with are signing up to your code of conduct? Every firm, including the firms that you are running, you will have a code of conduct. You are expecting that the person who is working with you will abide by that code of conduct. That's, as CAs, that's our basic characteristic, right? And imagine doing this for 140,000 employees in a company. How will you do that? And multiply that by God knows how many more vendors that you will onboard, how many customers that you will have. If you're in retail, how do you manage it? Right? First of all, do you have a policy? Let's start with that. Okay. How comprehensive is that policy? And you will see that this policy document, the code of conduct itself, has a lot of touch points with different principles. So somebody needs to actually sit and look at compliance with these principles to ensure that yes, the code of conduct that I have now come up with is in compliance with these principles. Right? That's an activity on its own. Okay. Are we creating a governance framework around it, in the sense that, okay, there is a board of director, but do they know what is ESG? Do they know that they have to sign up to this sustainability report? Is there an education around it, right? And what are the policies that they have approved and monitored, right? The measurement of the achievement of those parameters, are they looking at it? How often are they looking at it? All of this then becomes important in a way, right? And you would see that in the core elements, which is basically the guidance against each of these principles, now talk a lot about stakeholders, right? In the section B, which is the management and process section, there is a section which asks you to identify stakeholders. Identifying stakeholders, right? I will take you through how TCS has written it, and you will realize that somebody has actually done a lot of work around it. Right? It's not easy to just say, okay, my customer is a stakeholder, my employee is a stakeholder, my vendor is a stakeholder. Those are easy cases, but if you look at the way they have done it, right, identified stakeholders, that's quite professionally done, right? And this is, like I said, unless and until you imbibe these things in your processes, you will not actually realize the true essence of ESG, right? So this is something I'll take you through, very interesting. Then we talk about the second one, which says that businesses should provide goods and services in a manner that is sustainable and safe, right? So again, we spoke about product life cycle, whether the company has understood or done an analysis of product life cycle. And there is a discussion on that in your annual reports. Most of the companies actually publish about that in a paragraph or two, the fact that they've done it and these were the impacts of or the risk areas that they are monitoring. But not everyone does it, right? It was new to me for the first time when I read it, product life cycle management, right? And that is a separate theory on its own. There are various frameworks on which you can do it. It's a good learning, right? And in the fact that it also needs to be focused on what products that you have today and also what you intend to do in the near future, right? Is a good, interesting discussion that you will have. So this needs to be in place. One of the things that is generally discussed is about customer grievances, right? How is that collected? How is that resolved, right? And that is forming part of your BRSR, right? Now, how many times have we seen all of these complaints being raised on social media? Somebody says, okay, Swiggy, I got this, I ordered something, I got this, right? And it goes viral on social media. The company says, dude, you got this wrong, I've done this well, this blah, blah, blah. But does that require reporting in BRSR, right? One of the requirements in the BRSR is customer feedback, customer grievances, how many were received and how they were, and how many were resolved, not how, but how many were resolved. Will this also form part of that number? Who's going to keep track of that? There's no system which says, okay, these were so many complaints raised on Facebook on Swiggy. There's no way you can do it. And even if you did by some magic, you will find difficulty in finding an auditor to sign up to that. Right? So when we audit or provide any assurance, we need processes, we need controls around those numbers and whatever figures that are getting included, right? So when I say that you need to report on these things on these different KPIs, it needs to be understood in a way that it is going to be subject to audit in the next few years, right? Without having that objective in mind, you have actually not understood the gravity of the issue here, right? So you've seen in many cases where if you're looking at the backside of a product, you'll say for feedback, write to us at info@customer, blah, blah, blah. Right? At least they have said, okay, I have a mechanism to take feedback. I have a mechanism for redressal, but you will have to do something. You will have to write a mail to me, otherwise I will not be able to track it. Okay. I mean, with that one simple line, what have they done? They've achieved a lot of things. Have you communicated with the customer? Have you communicated with the stakeholder? Yes, you have communicated with the stakeholder. Reasonably well, because every product has that, right? Have you now set up a process for gathering information that needs to be reported via BRSR? Yes, because Now we have told the whole world that until and unless you complain on this email address, it's not a formal complaint. So you have set a process, you can then go to the mail ID, look at how many complaints and resolve them. Right? And that is the level at which it gets to, right? To actually imbibing these things in your business operations. Okay, principle 3, businesses should respect and promote well-being of all employees, including those in their value chains. That's interesting. Well-being of employees. Okay, there is one highly debated topic. Is there enough work-life balance? What have you done to ensure there is enough work-life balance? Very subjective, right? I mean, it is the fact that the company is now required to report means that they have to do something, right? They cannot just fast. They cannot say, no, I ensure that employees leave at 6 p.m. in the evening. I don't call them after that. Nobody will believe all that, right? So there has to be a process, there has to be a measurable target or a metric which you will report, right? And get that audited in the near future. So that is one question that has been asked, right? Is there enough or is your office good enough for people with disability? How many offices are compliant with that requirement? Okay, you are now required to report what's your gender diversity. Okay, you are now required to report equality and equity. I found few months to understand what is the difference between equality and equity. There's a big difference now. But yeah, what do you do to do that, to make sure there is equity? And then what you do in terms of the community around you. How many employees have you taken from around your place? I mean, that's important, right? If you are setting up a factory in Jamshedpur, for example, you would want the city locals to work there. It saves a lot of cost, it saves a lot of Diwali holidays. It is aligned to their business, right? But the fact that this is now required to be reported is changing the way people are looking at it. The next one is on interests and responsiveness to stakeholders. Okay, again, define stakeholders, give them an opportunity to report their concerns, log their concerns, responses, voluntarily understand what their issues are and respond. So when we speak of risks and opportunities, this is where it becomes important. And risks and opportunities in relation to the stakeholders that you identify. Right? So that becomes an important discovery. Okay, and the next one is on human rights, safety, redressal of any issues that they may have, grievances and whatnot. Okay. Principle 6 is around protect and restore environment. Right? So this is very, very key. A lot of things around GHG, which is greenhouse gas reporting, gets included here, which is subject to reasonable assurance, by the way. Here, I think we should definitely spend a few seconds on the GHG protocol. The GHG protocol again dates back to 2015, 2016, which actually gives you a formula. So first of all, defines what is GHG. Like I mentioned, there are those 6 gases, and also gives you a quantifiable method to find out how much have you emitted, right? And how have you emitted. So what has been decided is that carbon dioxide will be the proxy for all the 6. That means all the 6, one of which is carbon dioxide, the other 5 would be converted into carbon dioxide equivalent to then quantify how much greenhouse gas emissions that you're having. Right? So wherever you see GHG being reported, you will see that in metric tons of carbon dioxide. Right? It doesn't mean that it is emitting only carbon dioxide, there are those 6 gases, but they are reported in equivalents of carbon dioxide.
Unit of measurement.
Sorry?
That is the unit of measurement.
Unit of measurement. Right? So there is a formula around it. Right? So that is one thing. There is another concept which is referred to as scope 1, 2 and 3 emissions. There are 3 types of emissions. again coming from GHG protocol, scope 1 is the emissions that you have during your production process in your general day-to-day business. Scope 2 is emissions out of the energy consumption, the purchase of energy. Okay. Scope 3 is emissions in your value chain. Okay, for example, if you go to office in your car, that's scope 3 emission for the employer. If you are going for a business travel through air, that is scope 3 emission. Right? If you have a bus which ferries employees from the factory to their houses, that is scope 3 emission. Right? So there are these 3 types of emissions: scope 1, scope 2, and scope 3. The most difficult one is scope 3. Right? And everybody struggles with it. It is today only based on estimates, and for that there are some formulas that are available, but nobody can say that this is the accurate one or this is the best way of doing it. Right? Again, this space is evolving, but definitely at least it gives you an indicator of where you are. That is sufficient enough to open everybody's eyes. Right? So there is scope 1, scope 2, and scope 3. With scope 3, what it forces you to do is to look at your value chain. And there is a slide on value chain which I will spend a few seconds on. But that is where ESG reporting becomes quite effective. When you're not only talking about yourself, you're not only talking about your compliance with greenhouse gases, emissions and so on. You're talking about whether your vendors are doing that, having the same level of compliance with ESG, and how are they doing it, right? So all of that becomes your scope 3. It is extremely difficult to do those computations, but people have done that to get a broad estimate of emissions.
But then you need to provide assurance, like
That's another thing.
that also reasonable.
That's also reasonable. And right now the assurance is on scope 1 and 2 to start with, but
No,
3
more
will
has
also
3
come.
also.
I thought that's the next year.
No, this is very good.
This auditing scope 3 is going to be,
Yeah.
I don't know. I mean, if it was a financial reporting standard, you would qualify, because you wouldn't have processes around computing, you don't have enough frameworks to compute, and there are no controls which you can rely on to report. So that is a very big, we'll have to see how the thing evolves. What does the business do to influence public and regulatory policies, right? Why is this important? Like I said, every employer, every government has a role to play in ESG. So it is expected that in order to achieve the ESG parameters that the organization has set for itself, it needs policy support, right? And for example, the PLI scheme, the FAME, all of those are very important schemes, and all of these were developed in collaboration with the industry players. It was not done just by the government of India, it was done with collaboration, right? So where all are you member of? Are you, let's say, NASCOM, ICAI? What do you do there? I mean, have you had any influencing reports that you have generated, right? Have there been participation in the competition that they have organized? Have you taken lead on any specific environmental matter, and how do you deal with that? All of those get included. It's quite possible to say, sorry, I have not done any of that. Okay, it is fine. It's generally comply or explain kind of thing, but people take pride in saying that I did this, which nobody else did, right? And that is where you're crossing the line on greenwashing as well, which we didn't speak so much on. Greenwashing is just, you're doing the same thing, you're just writing it in different rosy language to say that you've done a lot more in compliance with the ESG requirement, actually not doing anything, right? So that is very, very discouraged, right? So you will see, unfortunately, a lot of the sustainability reports are like most accounts in a financial statement. There's too much English in it, too much English, right? And some of the time this becomes like something which is too abstract, too directionless, and that's where people lose interest. But I think we have to do a lot in making sure that it is crisp and to the point, some sort of an executive summary or so on. But yeah, we are yet to evolve to that point. The last one, This is business should engage with and provide value to their customers in a responsible manner. This is about reuse, recycle, dispose, reward, ownership on the product's ESG implications. Right? So that is the principle around this. So you would have seen on each slide there are essential indicators and there are leadership indicators. Essential are those which are mandatory. Leadership are those which are voluntary. You can choose not to give. Now let's talk about BRSR core. I just need 10 more minutes and we're done. In BRSR core, this came out in July this year. It's fresh. BRSR core is a subset of BRSR. It's not a new thing. It is a subset of BRSR, and it was a consultative process which was managed by the ESG Advisory Committee of SEBI, which then wanted to bring some bit of accountability and responsibility in the BRSR process, because we know that BRSR, like BRR, has the potential of becoming a checklist filling activity, right? Unless you mandate some sort of an audit or an external review, it doesn't become very serious. So they came up with this approach, which was to make sure that it is quantifiable. The report is having quantifiable parameters and matrices, and it brings in comparability of what is being reported, the standardization of what is being reported. It is at that time also a guidance note was issued, some sort of a guidance note on how the BRSR report should be filled up. There is enough and more guidance on this. Right? You can actually go through that. For each question, for each checklist indicator, there is good amount of narrative which you can learn from on how to calculate that. But of course, there is references to scope 1, scope 2, scope 3, which just remains as complex as it is. But as far as the other things which are easily quantifiable or numbers for which are already there are fairly well explained, I'll urge you to look at that. It gives you a good insight of it. Okay. Here it is. This is where the assurance comes into the picture. Right? So we are talking about BRSR core, which is a subset of BRSR, being subject to assurance, reasonable assurance. Right? So BRSR core in total would have about, if I'm not wrong, 150 odd KPIs or quantitative numbers that are included. Right? Give or take 5 or 10 here. But that's a big amount of data that the auditor has to look at. Right? And that is going to be applicable in a phased manner, and that is here. Now, you would see that there has been a slight increase in the essential indicators, which is an upgrade from BRSR 2020, and so along with this BRSR code, there are a few more additions or an update that we did with BRSR. And one of the things that came about was value chain related disclosures, and I'll come to that in the next few slides. But hold your thought there. Again, we'll come back to defining what's a value chain very briefly. We'll not spend too much time. But also after that, we'll discuss again scope 1, 2, and 3. Right, I think to this audience I don't have to discuss too much about what's limited and reasonable assurance, but we are now talking about reasonable assurance. But please look at some of the assurance reports that are already there on sustainability reports. Most of them are limited assurance, very few reasonable assurance. And I would say 50% is on ICAI standard 3000 and 50% is on AA 1000 standard. So I mean, the framework, there is not one single framework even for auditing, but now it's only a matter of time that I would expect ICAI to be the most popular one and being applied. So a little bit more on that. I think having discussed this far, you could now think of how difficult it is going to be to do an audit of ESG reports or the BRSR reports. Every single number, every single KPI needs to have a process on its own. And I am aware that large companies have actually started updating their ICAI requirements, the RCMs and the process notes, to accommodate ESG related processes and ESG related quantitative numbers. Right? So when an auditor comes, then he has produced those process notes, those RCMs, risk control matrices, which will then form the basis on which the auditor is going to decide the nature, timing and extent of the work that is going on. Right? So that is the level of preparedness of some companies, but it's a long way to go for everybody to get to that level of preparedness when it comes to assurance. So I would think that over the next 3 to 4 years time, you would see a lot of activity around this, which poses a lot of opportunity for us today in the capacity as advisors, not so much as auditors. Because you've been auditors, you know that what you're expecting when you become an auditor of a sustainability report. You can actually advise the company on how they should set their processes, how the controls can be put in place. Are they actually recording that data? Is it somewhere stored in your system? Is it retrievable? Or are you not even storing it? It is quite possible. Right? So identify those gaps, advise them on being compliant with that. I'll briefly talk about the value chain. This is good. This is Michael Porter's value chain model. Okay, this has been a focal point for a lot of management strategies, a lot of frameworks as well. So this GRI framework also refers to this model, which is very simple. This is not rocket science. We've learned it at some point in our careers. Okay. Here he clearly defines how value is added by a business. Right? Value is added. So you may have now thought, okay, for example, one of the discussion points for NICA listing or even HONASA listing was the fact that what is the company doing? Firstly, okay, yes, there is a good brand. Does it have manufacturing facilities? No, it does not. Okay, who is doing the manufacturing? It is given to somebody else. So what value are you adding? Okay, I have a brand. I am making sure that it is meeting certain quality requirements, and I am able to reach to the right customer. Okay, but is that the full value that you could have added? No. So for that you will have to do vertical integration. You will have to build your own factories. Then you get more margins. That is normal economics, that we have understood, right? The more you vertically integrate, the more margin you can garner. That's the same which is written here, right? If you are able to, your margin is determined basis what you are doing, what value are you adding in that business process. Right? I think from a perspective of ESG, what we are talking about is your vendors, your customers, your employees, right? Who help you to achieve your margins, who help you to add value in your business, are part of your value chain, right? And the greenhouse gases emitted by them becomes part of your scope 3 emissions, right? Scope 1, scope 2 and scope 3, like I mentioned. Just to refresh your memory, scope 1 is your production process emission, scope 2 is the energy that you purchased, scope 3 is everything else. Right? So much so that your product, the emission that it is having during its life cycle is included in your scope 3. So that is the importance of the value chain and understanding how scope 3 is developed. Right? And I think this is one of the last things that I wanted to discuss, that our institute, the SRSP has come up with a great maturity model assessment document. This is one of its kind. I've not seen this elsewhere. What it does is that there is a scoring mechanism. Depending on how you answer your BRSR questions, there is a score assigned. Okay, and at the end of the day, when you total it, you will get one ultimate score. Depending on that score, you get classified into these 4 levels of maturity. Right? This will give a directional view of where the company stands when it comes to ESG related compliances. Okay? You start with the formative stage where you're learning, Then you come up with the emerging stage where you are applying what you've learned, you are managing the risks that you've identified. Then you come with established stage where you've done that for some time and now you're comfortable. And then comes the leadership where you're taking ESG risk head on. You're using that as a basis for getting competitive advantage. You're developing products which are ahead of its time when it comes to these kind of ESG matters. So I think this is a good read. You should spend 5 minutes. It's not a very large document. I think 30 pages you can read it. And this will give you a good view on where a particular entity stands in terms of ESG. Okay, the last slide. Like I said in the introduction, none of this would matter if you did not have a good governance around what you're doing, right? Like I said, in SDG, the most important thing is partnership. In ESG, the most important thing is governance. And that's my personal view. Because no matter what targets you set, if you're not held measurable, you're not measuring it, there's no governance around it, it's of no use, right? So today, the directors own up a significant amount of responsibility. In some of the IPO documents that you see, right, today there is a discussion on ESG for sure. The independent directors, people who do not participate in the business, are required to sign up saying that whatever is mentioned is true and correct. Look at the responsibility that they are taking up on a topic which they don't fully appreciate, right? And therefore, the whole issue around education, the whole issue around, handling complexities which you do not currently understand is paramount. And the companies today will need to upgrade themselves to having better policies, making sure that there is good governance around it, and holding the company accountable and responsible for it. So that's, I think, the last message I would like to give you, because without governance, none of these would really matter. Right? So I think with that, we're done for today. And if there are any specific questions, I'm happy to answer. I know it's been quite a heavy topic and perhaps not a discussion on profit and loss or revenue expense, but happy to take any feedback or any.
So Pradeep, what's your thinking and approach in dealing with this value chain disclosures? You must be, because clients would have started talking to you.
Yeah.
What's your thinking?
So I think.
And I think in BRSR report they talk about 75% in value chains. To that extent, you did.
So, yes. So it is so nice to see that the BRSR, the way it is written, and these developments are aligned with GRI in a great way, right? So there is discussion around boundary setting.
Yeah.
This is a clear example of how you are setting up boundaries. Right, but having said that, today's scope 3, if any company in India has been properly able to do this, I think he's overconfident in saying that. I've looked at TCS report, I've looked at every company, those big ones that are, they've actually gone ahead and reported scope 3. How good they are, only when we audit them will get. Right, but yes, they have done an attempt. They've actually given out what are the scope 3 emission categories in terms of what are the origins of scope 3.
Within scope 3 there are 15 categories.
Yes, all that is there, but the process around gathering data.
In the Indian context, and not so in India because it's worldwide also, to get that data itself is very challenging. So how are you advising your client? Because you're talking about reasonable assurance just a few months away, right? Because it will be published in the next year's annual report.
And I think that's a matter of debate and consultation. Today I would think not many companies are prepared with it. People who have done GRI and GHG reporting perhaps could claim to have some processes around it because they've done it for a few years now. But I think for others it is perhaps going to be some sort of a disclaimer, I would say, if there isn't enough process around it or of intelligence. Okay, thank you so much for your time. I hope you've learned something out of this discussion. We were more than happy. That's my ESG contribution for the day. Thank you so much for patiently.
It was an excellent presentation.
Thank you.
The depth of the subject matter comes out in the way you are being able to actually simplify that and give it to us.
Thank you.
That's all.
Thank you, sir.
started with true and correct. In ERCR reference, you started with true and correct. See, now true and fair is only financial. When we had VAT, we had GST, everybody is talking true and correct. Even in a subjective matter like DRCR, we are talking true and correct.
That's true and fair. Reasonable assurance is always true and fair. But the management actually signs up to true and fair. Management signs up. But auditors cannot do true and fair.
For doing the assurance work, are there any certifications which are there? Globally, I know GRI has certification.
Yes. But SRSP will come up. I think there is a plan by the institute.
Top
That's why the discussion is who is the right person. And honestly,
Sir, in case of light version, in case of light version, that is voluntary.
Light version?
Yeah, light version, that is voluntary. So suppose any company want to, so how should go to because there is a separately that this market listed by capitalization, it is going with the annual. But light version is there, no? So how they
but you could actually file it with your IOC code, right? With your annual.
No, suppose so they want afterwards, they have taken decisions light version. Because I
Members.
searched MCA portal, it is not there. How we should upload?
Members, the organization report on their environmental, social and governance performance and impacts via non-financial reporting. CSR reporting, BRSR, should the organization do it because they are compelled under Companies Act or as a social responsibility of the organization, which was very well and built upon by CA Pradeep sir. That was a fantastic session for 2 hours. A round of applause for this time. Thank you. Can I request our MC member, CA Shripad Yachan sir, to come out to dais and then hand over the memento as a token of gratitude and respect. Thank you, sir. Thank you, members. Keep supporting Bangalore.